The last 10 days have been packed with major events, from the Federal Reserve meeting to the latest jobs report, earnings season, and even updates on the U.S.-China trade negotiations. Let's break it all down into 7 key takeaways that can help you navigate the current market landscape. Welcome to this week's Fastest 4. I'm John Shrewsbury, in for Scott Inman. First up, the Federal Reserve. While they didn't cut rates last week, the stage is set for a potential rate cut in September. With signs of a slowing economy and a soft July jobs report, we believe the Fed is likely to act soon. This could be a positive signal for the markets, but it's important to stay prepared for short-term volatility. Takeaway number 2, the U.S. economy is clearly losing momentum. Consumer spending is decelerating and delinquencies are rising, even among higher income households. While the unemployment rate remains stable, the soft jobs report and downward revisions to previous month's data are concerning. On the bright side, wage growth is outpacing inflation, giving consumers some spending power. Takeaway number 3, big tech's earning power. Here's some good news. The S&P 500 is showing more earnings power than expected, thanks to big technology companies. Companies like Nvidia, Meta, and Microsoft are driving impressive growth. With AI investments leading that charge, this trend is likely reshaping the market and boosting optimism for 2026 earnings. Takeaway number 4, the AI revolution. The dream is alive and thriving. Companies like Meta, Microsoft, and Amazon are ramping up investments in artificial intelligence with billions pouring into innovation. These investments are already paying off, driving productivity gains and earnings growth. AI is not just a buzzword, it is transforming industries and creating opportunities. Takeaway number 5, trade and tariff risk are back in focus. Higher tariffs on goods from countries like India, Switzerland, and Brazil are creating challenges for businesses and consumers. While these tariffs bring revenue to the U.S. Treasury, they also add pressure to profit margins and inflation. It's a reminder that trade policy remains a key market driver. Takeaway number 6, Treasury's debt strategy. The Treasury Department is leaning heavily on short-term T-bill issuance to manage government debt. While this approach provides some flexibility, it also creates rollover risk as debt matures. With $6 trillion in marketable debt tied to T-bills, future rate cuts could complicate financing operations. It's a dynamic that's worth watching. Takeaway number 7, the S&P 500 technical trends. Finally, the S&P 500 may be due for a pullback. After a strong run, the index fell below its 20-day moving average last week. Seasonal trends suggest the remainder of August could bring more volatility, but pullbacks may be shallow and present buying opportunities. Stay patient and watch for signs of support before jumping in. So what does this all mean to you? As we enter the seasonally weak period of August and September, it's a good time to stay cautious and focus on long-term goals. Our investment team at GenWealth is keeping a neutral stance on equities and fixed income, while monitoring key trends like tariffs, economic data, and AI innovation. Remember, investing is a journey, not a sprint. If you have questions or want to discuss your portfolio, feel free to reach out. Thanks for watching, and don't forget to like, share, and follow for more updates. Together, we can navigate the markets with confidence.
Want to become smarter financially in 4 minutes or less? Sign up at fastest4.com to get insights and updates like this delivered to your inbox weekly.